There's three big events looming in the next 9 days. Probably the most imminent one, probably tomorrow before the close, is the latest China trade talks, Kabuki theater. So Besant, again, is overseas. For some reason, he never does it in the U.S. He's overseas. And they'll probably have some announcement tomorrow of some kind. The last time, of course, this happened, the market exploded higher because the final white flag went up. So that's event one. Event two is not long after. It's an hour before the opening bell on Wednesday. That's the CPI. See how the inflation data is doing. And the third one is a full week after that, which is the FOMC. So everyone's all obsessed about interest rates and inflation, et cetera. So those are going to be some big goings on. I've got my charts loaded up for you. Let's jump in and kind of catch up with each other. We begin, as always, with the spider, which, as always, is just kind of creeping a little higher every day. We're at 0.25% on the ES. Nothing dramatic. The VIX has collapsed. I read this morning that it is the fastest collapse in volatility in market history. So we've gone from terrified to, everything's fine. So the VIX is in the mid-teens, and the spider just kind of tacks on a little bit more day after day after day, except for weekends. That's about the only exception. The diamonds are also up, again, a little bit. This line here is anchored to this data point up back on March 4. We have a cluster of overhead supply left here. And the kind of easy part of the rally, which was from here, April 21 to here, May 19, well, that's over. And that we lost some and then regained it back. But this is the really explosive, kind of effortless part of the rally. IYT, just since we're talking about the Dow, has continued to be in a much more bearish configuration. It has sealed this price gap, but on the whole, IYT looks way more vulnerable than, say, the diamonds do, or the cubes, or the spider. Ethereum is up over 2%. It's still below this broken trend line. And that broken trend line is something I've been more than obsessed with, because it's, for me, a guide for what's happening with tech stocks in general. And so as we look at the cubes here, they remain below their own broken trend line, although much closer to it. Ethereum's way below its busted trend line, whereas the cubes have been kind of kissing the underbelly of this for some days now. As we zoom in, we are up about 1/3% on this. For weeks now, we've been just skirting underneath that broken line, never surpassing it, and we're getting closer and closer and closer to the lifetime high right here. So that convergence looks like less than 1% at this point. And of course, what could happen for the bulls just to run roughshod over the one or two remaining bears would be just to pop it over that sucker, get it over the trend line, get it over the lifetime high, because lifetime highs make easy press, because by their nature, everybody's a winner. And you can go in and hope that prices just keep bumping higher until who knows when. SMH, the semiconductors, is also up even stronger. They're up about 2%. And also getting very close to what should be resistance, and if it's busted, will be another success story for the bulls. The descending trend line and the gap are at play here. Here's the descending trend line. As you can see, today's high got rather close to it, didn't violate it. And the gap, same deal. Got close, didn't push above it. So we're just like right there. So honestly, by Wednesday, there's no doubt about it, by Wednesday, either the bulls are going to just strap on their rocket boosters and take this thing even higher, having conquered all those things, or it'll be one of the cleanest reversals in technical analysis history. Just like boing, hit resistance and, by the skin of our teeth. So it should be an interesting day or two. SOXL, by the way, which is the leveraged bullish on semiconductors, quite obviously is very strong today, up almost 9% and getting close to its own resistance trend line, which isn't quite as important because it is leveraged, but it's still an interesting chart nonetheless. Over in a different industry, financials, it's actually down, amazingly. XLF As we look here, this zone here, around about 52, has tended to be the poop out point for over half a year now. We got up to it, it sunk. Got up, sunk. Tried again, sunk really hard, and up once again up there. So this seems to be, for whatever reason, a line that it just cannot seem to pass by any substantial margin before it just re-weakens. Overseas, emerging markets continuing strong. EEM has busted above this line here, up about 1% today. So, I guess the closest pattern one could associate with that would be a cup with a handle. No, there's the cup, there's the handle, and up it goes over the line. We've also got, excuse me, a little fumble fingered there. That happens on occasion. We've also got EWW, which is Mexico. And this one's up a little bit, but it does not look poised to break out at all. On the contrary, it looks like it's just about done, assuming it doesn't pass this dashed line that I've drawn there at 62.33. But it's, in spite of the supposed trade wars going on, Mexico's been doing just great. But it looks really exhausted at these levels. And speaking of China trade wars, here's FXI up 1.33%. And I would say the key on this one is this gap at 38.22 for resistance. Now, bear that I may be, there are tiny pockets of assets which I have been a long-standing fan of and been pretty vocal about. Gold is one, silver even more so. And silver, I guess I always kind of like the underdog. Everybody knows gold, but I'm kind of silver's champion because it's been, it's got a lot of things going for it from a chart perspective. And it's had some wiggles and wobbles along the way, but on the whole, it's been doing just fine. And so as we look at the long-term continuous contract of silver, it's having another nice day, up well over 2%. And it's at least getting within the zip code of its own lifetime highs. Gold went to lifetime high territory back in April, had no problem. Silver, a little bit of ways away, but we're getting close. But it's a very nice formation, very nice breakout. Rally's getting a little long on the tooth. I can see that. But, as we look at silver by way of SLV, this is the highest it's been in 13 years. That's not bad. And this bullish base here was quite well formed. And like I said, it hasn't been squeaky clean. There have been some scares. We went into the pattern and then so forth. But on the whole, higher highs, higher lows. As I say, we're getting kind of lofty up here. And they don't hand you a notice on this day or this day that the rally's over. Just the odds get higher and higher that it will be over for some more backing and filling. But I want to at least highlight how nicely silver's been doing. And also miners continue to do well. One particular individual one I've been mentioning is DRD. And we're up about 4% on that with important support down at this line level, 13.18. Crude oil has been a thorn in my side, but it hasn't violated the setup quite yet. It's not helping. We're up 1.22%. This is the key pattern right here. We're a few pennies into it. Not sure what to say on this one. I've certainly trimmed exposure to energy down to just a couple of symbols at this point, but so far not going so well on the energy front. Politics are informing a lot of asset motion. The latest one, of course, with the drone attack and the domination of China in drone manufacturing. U.S. is making drones, domestically made drones, a priority, and so companies like Joby Aviation are getting a lot of attention. So they're having a very good day, up about 13% on JOBY. Another hot tech area, although not particularly politically driven right now, it continues to be quantum. Couple of stocks here. One that I think is kind of hazardous. It's a very speculative sector in the first place, but this is Quantum Computing Inc., QUBT. The reason I say it's hazardous from a trading perspective is that we are getting terribly close to a major price gap there. In contrast, QBTS, which is down 2.5% today, seems a much better formed pattern. I say again, this is like fusion nuclear energy. It's very speculative. There are plenty of very serious people, scientists, who believe that quantum computing is decades away. And this is a fad as meaningful as, say, Nikola, remember them, NKLA, or Theranos, or something like that. It sounds good, but it's pie in the sky. Could be. It's hot right now. I mean, people can create a mania without any true basis behind the business, and eventually the mania will bust. But if you had to go into a quantum stock from a charting perspective, I sure like D-Wave better than I do QUBT. There are a few decent short actions happening in the old portfolio here. Shopify is behaving itself. We're down at 1.5% on this one. This is a new one, Vertiv Holdings, VRT. And in this case, we've got a beautiful gap there where we've got pretty close to, on Friday. And so, but this is turning away from that, it seems. And a little better known than those things is CMG, Chipotle. This is another short holding I've got, which is down over 2%, which on a day like this that is utterly green isn't too bad. So, that's CMG. But just to hit on some general themes before I say goodbye, once again, bonds. If we break this pattern, it's a big deal. If we break this pattern, rates by definition will go up, and that will be suffocating. So I think it's critical to respect the bond setup and keep an eye on if this breaks. I will mention it endlessly if it does, believe me. InCube, the NASDAQ, we've seen the cubes before. I know that. I just wanted to highlight this because this is long-term and shows these fib zones and shows not just a short-term trend line, but this very long channel that we've broken below. And what remains key here is the lifetime high. That's psychologically very important. As far as the chart goes, there's not any really patterns or setups to speak of. It's just all about whether it can push to new high or not. And finally, the Russell 2000. On the one hand, on the bearish hand, this setup is still present and has not been violated by present price action. On the other hand, this bullish pattern has completed and we have reached escape velocity on this. So in the middle there, we've got kind of this see, now you wish I knew sports because I could come with some metaphor, but I don't think it's the line of scrimmage, but let's just call it the fight zone between those two patterns. The bulls are winning today clearly, and it's really a question of can it push into the zone defined by this pink pattern, because if it does, well, all bets are off. It's just going to churn higher. So that's the face-off right there. The bears in the pink versus the bulls in the green. And it is exactly the bottom of the hour, so I'm going to say goodbye.